All right, we are live. Good afternoon, everybody. This is Carlos Salgado, Executive Marketing Director, and I'm excited to be back on the webinar series with you guys. And you can count on the leadership and everyone involved in the company in creating more content for you guys so that you continue to grow. We're going to leverage technology to provide you as much resources on training, whether it be on the system, on the products, so that you guys all have access to win. Right, you have access to this material with your teammates. You can be watching this at 2 in the morning, so that you're constantly just getting quality content to help you build your business. What we're going to be training on today, I believe, is very fitting. Starting off the year on why life insurance. It's important to understand really the power that you have with that license that you possess and how you can really make an impact. It is the staple. It is the, I would say that annuities, 403Bs, the premium financing, those are the pretty much what would you call it? The salad, right, of our business. But the steak, the meat and potatoes of what we do is life insurance, because it's something that we believe everybody should have. And it's important you understand, what it is that we do and why we do it, so that you can go out there and influence change and really help people and, let's face it, build a successful business that you can monetize and flat out, become wealthy doing it. So we want to show you really quick today on why life insurance, okay? So let's go ahead and get started. I'm going to go into screen share mode here. Give me 1 second. So let's share the entire screen. Perfect. Okay, so you guys should be able to see my screen. And we're going to go right into presentation mode here. Here we go. So today's training is going to be on why life insurance. And I'm going to be able to cover this presentation within the next, let's say, about 40, 45 minutes. It's going to go into our back office, so I'm excited about that. It's going to be there for future use. And I just think it's going to be a great tool to leverage that new associates can really start on why we do what we do. So, life insurance is a very important staple that we believe every family should have. And many people say, well, I get it, but they don't really understand all the intricacies of life insurance and what it can do. So that's the purpose of this presentation. So the outcome, by the end of this, you're really going to increase your confidence with your life insurance license on what you can go and help people do right away. I love this, this little poem here, so to speak, right? It is, I am your life insurance policy. You and I have similar purposes in this world. It is your job to provide food, clothing, shelter, schooling, medicine, and other things for your loved ones. You do this while I lie in your safe deposit box. I have faith and trust in you. Out of your earnings will come the cost of my upkeep. At times, I may appear insignificant to you, but someday, and who knows when, you and I will change places. When you're led to rest, I will come alive and do your job. I may provide food, clothing, shelter, schooling, medicine, and other things your family will continue to need, just as you are doing now. When your work and labor are done, mine will begin. Through me, your hands can carry on. Whether you feel or whenever you feel the price you're paying for my upkeep is burdensome, remember that I can do more for you and your family than you will ever do for me. If you do your part, I will do mine. Sincerely yours, your life insurance policy. I love that. I hope you can really look at that and say, wow, that's really powerful, because that is what we do, guys. And, I put in bold letters down the bottom, by far the biggest benefit that life insurance offers in the event of an unexpected or premature death is tax-free money to your beneficiaries. So with $250,000, $500,000, $1 million policy, generally speaking, right, I put an asterisk because there could be estate taxes and things like that, but generally speaking, that is going to go 100% tax-free to your spouse, your wife, your husband, your children, your church, your a charity. That's a very powerful thing about life insurance. Because we're all going to go sometime, and nobody leaving this place alive. So why not help the next generation and give them a shot by leaving them something to help them carry on? That's what we do, guys. Okay. So let's get into some processes. People always ask me, well, how much life insurance do I need? And I want to share that tool with you right off the bat. We call it the dime method. So if you are watching this right now, feel free to take notes, because as you're taking notes on this, you're just going to retain the information more if you're writing it down. And this is your profession. You want to know exactly. So when someone asks you, well, how much cover should I get, or how much life insurance should I need? Because it is too much life insurance, and more often than not, most people do not have enough. So what should it cover? That's covered in the acronym, the DIME method, as you see, printed out here. Is number one is debt. So life insurance proceeds will eliminate all remaining debts, such as credit cards, medical cards, etc. Right? As $25,000 of credit card life insurance to make sure we cover that debt in the event of an unexpected death, so you don't burden your spouse with that if you're married. Okay. Income. So it should replace about 10 years, right? So when you do a policy, if someone has $50,000 a year annual income, a good death benefit would be times 10, would be $500,000 of death benefit, right? So $500,000 would be a good amount to have if someone is just replacing their income times 10 years. It should be able to pay off your mortgage. So life insurance death benefit should pay off your mortgage in full in the event of death. So that's important to have as well. And then education is life insurance death benefit should cover cost of education for each child if you have more than one. I.e., an example would be, let's put $100,000 away for each child, because we know how costly education could be. So when you have these things in place, I mean, you got to look at the bigger picture. I mean, it's already an emotional burden, especially in the event of premature or unexpected deaths, that a family has to deal with somebody no longer being here physically. But man, what a blessing it is to be able to indemnify, right? Make yourself whole to be able to take care of things that are now have to be taken care of, such as funeral expenses and mortgage payments. So, GoFundMe is not a life, and it's more often than not, it's kind of the way to go now, is where people ask strangers, like, please help us bury my mom. She has no coverage, and we're dealing with her not being here. Now we're dealing with all the ramifications or the consequences of her not having a policy either. And now we have to pay for this and pay for that. We got to borrow money. We got to ask family members who really don't have money to try to pitch in something. And it's just sad, but it's the truth. So we have a huge responsibility in the marketplace to ensure that legacies are continued, that we take care of families, and it's vitally important. I'll share a story. It's a sad story, but it's eye-opening, and I think it's fitting for this presentation, so you really understand. I mean, we had a teammate was killed. It's a sad thing. She was 25 years old. She was killed by gunfire, believe it or not, at 25, and she had 2 children. She was in our team, believe it or not, right? She was going through the process of really getting things going, and we never got around to getting her a policy, right? And so a lot of people think, well, it's so insignificant, right? Why would a 25-year-old need a policy? Well, she has people that were depending on her, 2 young children under the age of 5. And, what I've been seeing on social media lately is how they're doing all these fundraisers all over the city of Yuma, Arizona, just to try to pitch in something and do something for her daughters. And it breaks my heart, because that's something that we could have prevented. And so it's very much an eye opener, for me, and I hope it's an eye opener for you, that don't ever let somebody tell you just because they're young or because, you know, you weren't assertive enough. You never ever know. You never know. I mean, if we even gave her $100,000 policy, I mean, that would have been huge, and that would have cost her maybe it's $18 a month, you know, and that's super important, guys. You know, so that what I got from that is never again am I going to take somebody's excuses, especially if they have a family, people that depend on them. They have to have something, because what we do is not just for a commission. Okay, there is a mission in it, and you know, for you to be able to do your job effectively, and when a beneficiary says to you, "Thank you so much for helping my dad, for helping my mom," you know, with this policy, because it's been really tough, but at the very least, we're going to be okay. That's a big thing to say, right? It's a big job, right? So going back to this is you see here, you know, what it is to cover. So you can do the dime method. I mean, you can do this on a scratch piece of paper. So when you're sitting down with somebody and they're like, well, how much coverage should I have? Well, it's like, no, let's go over the dime method. How much debt do you have right now? You know, what's your annual income? We want to do that times 10 years. Do you have a mortgage? If so, what's left on the mortgage balance? And if you have children, is college important to you? Okay, so we'd like to leave maybe $100,000 for each child. So that's the dime method, and that allows you to, you know, justifiably give a good amount of coverage so that family's taken care of. Okay, great. So let's talk about, we're going to go into some different types of insurance now. Let's talk about term insurance. You know, term insurance, I know I have some associates that have asked me, like, well, what's the difference between term and a permanent? That's the purpose of this webinar, why we're covering this, so you understand what term insurance is. You know, term is basically what it is. It's just for a term. So it's very simple and pure form of life insurance. It's the most simplest life insurance there is out there. Typically, terms will go, even if someone says, well, I just need something to cover for the next 5 years, 10 years, you can go all the way up to 30 years. The cost associated is going to reflect the time period, of course. So it's the most affordable. It's very affordable, right? So there's no excuses, right? So somebody should have at least have a term policy. So an example would be you have, you know, for $500,000 of death benefit for $50 a month for a 40-year-old male for 20 years. That's good coverage, right? So from age 40 to 60 years old, this male would have, in the event of death, would have a $500,000 death benefit that would pay out to his beneficiary. So if he was married, it would go to his wife if that was his primary beneficiary, and she would get $500,000 of tax-free money that could be used to pay off mortgages, college, you know, burial, funeral expenses, whatever it means, right? I mean, how heartbreaking is if someone doesn't have coverage, that spouse can no longer pay the mortgage, or, you know, now there's foreclosures. I mean, think about what could happen. So there's no excuses why someone shouldn't at least have a very inexpensive term policy. So when people tell you, well, you know, I just can't afford it right now, I say, well, you can't afford not to have it. You know, I'm not saying you have to go get an IUL, that's a permanent insurance, or because that's going to cost more, but at least get a term. And everybody, I mean, we could be helping everybody with that. That's why what we do is so valuable, because everybody virtually can be your client. You know, the cons of a term policy is that there's no cash value. I mean, you can outlive it and you don't get your money back. So the equivalent, I always like to use the analogy of it's equivalent to renting a house versus owning it, right? So when you are paying term insurance, it's kind of like paying car insurance. You know, if you don't get in a car accident in the next 12 months, the insurance company that you pay your premium payments for your car insurance doesn't give you any money back. It's the same with term. There is a statistic that about 90% of term policies are outlived, meaning that most people pay it. So you're kind of renting. It's like renting a house. You know, when you rent a house, you're paying someone else's mortgage, but you don't get to participate in the equity of that, of the growth of that house. So when you go from renting to owning a house, you know, you're going to pay more. You're going to pay now taxes and insurance. You're now responsible for the maintenance of that home. So you're paying more. However, there's more benefit to it because you get the equity, the growth in that house. That's a huge, huge difference. Okay. So probably one of the major selling points that can be done in a term policy is that it can be converted to a permanent policy, i.e. an IUL, with no underwriting in the first 5 years, so it can now develop cash value and not lapse, or better said, expire. So that's huge, right? So when people say, well, I would really like an IUL, but I just can't afford it right now, right? So let's get you a term policy, because you need that. And then within 5 years, as you make more money or your financial situation changes, we can convert it without underwriting to a permanent policy. And now, you can fund it and start building cash value. So it makes sense. So that's term in a nutshell. Permanent insurance is probably a large part of what we do with the IUL payments. So premium payments will be higher, but you will own your policy versus renting it. Does that make sense? So now that you own your policy, it's kind of like owning a home. So the cost for a permanent policy is going to be substantially more, right? So I showed you the example before, $50 a month for a $500,000 policy for a 40-year-old male. For a $500,000 policy for a 40-year-old male, in a permanent policy, you're probably looking at $300. So it's substantially more. However, it's going to build equity. It's going to grow. It doesn't expire. So if funded properly, it can last life and offer value benefits such as emergency fund. Right? I've had a permanent policy since 2004. I've mentioned before to our team, is it really an emergency fund? Yes, it is. There's a few times throughout my career in building a business, and I've had to dip into that for emergencies, and I'm so grateful that I had it, because it really helped out. Right? You can use it for a down payment for a home, because you don't have to wait till you're 59 and a half to access cash. Right? So you can access cash, and it's going to be tax-free. You can pay college tuition for children. Okay, so you can pull cash out of your cash value policy, your permanent policy, such as your IUL, and you can use it to fund your kids' college tuition. If you don't do any of the three, it can be a great supplement. It can supplement your retirement needs tax-free. Right? So look at it as a return of premium payments. So if you're paying, life insurance, premium payments, $300 a month for say 30 years, $3,600 a year. I mean, that's a substantial amount of money. So hey, you didn't die, you didn't get sick, but you've been paying this for 30 years. Well, the good news about a permanent plan is you can now start getting a return of those premium payments after funding it. Now it's gonna be able to come back to you in the form of a payment, and you could get it tax-free. And if you do it right, it still pays out a death benefit even if you live to a good old age. Right? So if you die prematurely, you're covered, but hey, you live to your 80s, 90s, and you pass away. Now you still have this permanent policy that's going to get paid out to your beneficiaries, and that's still going to be tax-free, because we're all going to die someday. So again, I'd rather have something that's going to build equity and grow long term. So obviously, what we do here at Difference is we do both, right? We do both term and do permanent. It's really going to be customized to the individual, because people say, well, what's better, term or permanent? It's really based on the individual, honestly. What are the needs, right? How much can a person set aside? So that's really going to come down to you doing fact finding and knowing how to ask the right questions, and figuring out what the needs of that individual or that family are, so you can make the best recommendation whether to do a term, permanent. There's times I've done an IUL, and then I've also added a term policy on top of the IUL. Okay, so again, it's really going to depend. The three types of life insurance that we really do a lot is obviously term insurance. Again, it's the least expensive, but you're covered. Permanent, right? You're going to pay more, but you're going to have it for life, and obviously there's more benefits. And then a lot of people don't really understand is final expense insurance. So final expense is basically that, your final expenses, your funeral cost, maybe you have some medical debt, maybe you have a little bit of credit card debt. So it's very much lower face amounts, right? So typically a final expense policy is going to be anywhere between $10,000 and $30,000 of death benefit that pays out to a primary beneficiary just to cover those final expenses. So it's not like a life insurance policy that pay $100,000 or $200,000 or $500,000. But the cool thing about final expense is we have a lot of seniors that don't have no life insurance. And now that they're older, they're like, okay, I realize that, I could pass away, and this could leave a financial burden to my wife, my husband, my children. And then, I can't, life insurance is just too expensive for me at age 70. Maybe a final expense policy that will cover anywhere between 10 and 30,000 to at least cover some burial expenses can be affordable. So I have a slide towards the end on what that would look like, but I just want you guys to understand. So this is what you can go do. So you can go help young people out with a policy, and you can go help senior people out with a policy, and then everything in between. This has been by far the biggest game changer in our industry over recent years. I mean, I started in the industry in 2004, and we were not marketing living benefits, even though they were around, but it was still too small then, meaning that I didn't know about it. A lot of the people I work with in the industry did not know about it. But nowadays, this has been the total game changer in terms of life insurance with living benefits. So traditional life insurance is a death benefit, as you see in the picture. I mean, that's it. If you die, your family gets the benefits. But nowadays, what if something happens to you and you don't die? But man, you are not in no position to go back to your money-making life. If you have a heart attack, if you have a stroke, if you come down with cancer, and now you're going through radiation or chemo treatments, someone that's going through radiation and chemo treatments is not in any position to be working a 9-to-5 job, at least for 3 months to 6 months, sometimes even longer. But do you still have to pay mortgage? Do you still have to put food on the table? Do you still have to take care of your family? Absolutely. So that's why living benefits is huge, because it's a huge game changer. It's life insurance that you no longer have to die to use. So you still get the death benefit in the event of death, but you have all these riders, right? And a rider is basically benefits that are added to a policy. So people say, well, what kind of riders do you offer? Riders are just features, right? So when you're purchasing a car, and when you purchase a brand name car, and there's different levels of that car, you have the most basic part of that car may have roll-up windows, right? You have to manually do it versus electric windows, or it has a better speakers or stereo system. So those speakers or stereo system or unique features to the higher grade vehicles that are more beneficial than the basic version of that car, those are right? That's equivalent to life insurance. So you can get a policy, which is just basically a death policy, right? A death benefit. Or you can add some riders, meaning that, hey, if you ever get sick, if long-term care rider, all kinds of things. Is if you ever get a disability rider, so if someone ever gets disabled and they can no longer work at their job and they're in construction, well, a disability rider would continue to make those premium payments for as long as necessary, because that person is paying for it. Now you're going to pay extra for those riders, but in some cases those riders, you want to have them. So we offer them as well. So the biggest riders that we offer are the living benefits. So even though they're riders, they're at no extra cost with National Life Group. They're just built into the policy. And that's huge, right? That's why we use National Life Group as our premier flagship company, because of the living benefits that they offer. This is why they have so much reputation in the marketplace and notoriety. And they're very, very strong company. They're 170 years old. And they've been doing living benefits. They're one of the first companies, I believe, ever to do living benefits. I mean, they have marketing material in the back office where they were offering living benefits back in 1937. So they're no stranger to the living benefits game. And this is why many other insurance companies have began to follow suit, because it's so marketable. So we do a lot of business here at Difference with many families, because when they say, well, Carlo, I do have life insurance, my next question to them is, does it have living benefits? More often than not, the common response to that is, what are living benefits? Well, it's basically life insurance you don't have to die to use. So, Mr. and Mrs. Client, if you came down with cancer, or if you had a heart attack or stroke, does your policy pay you in those instances? I'm like, I don't think so. So if I can give you a policy for the same amount that you're paying now, but now you have these living benefits added to that, would that be of interest to you? And guess what they're going to say? Of course, right? So a lot of times, guys, for the same cost that they're paying now, we can replace their current policy if they have a term or roll over their permanent to one that we offer, but we're going to add living benefits. And it's just going to make you look like a rock star because you're adding that much more value. So that's what living benefits are all about. So here's some examples I got from the back office of a life group that you all have access to if you're appointed with them, which I highly recommend. You go into their back office and be resourceful, see all the marketing material that you get for free, because you can leave something tangible in your client's hands when they're like, well, can you leave me some information on living benefits? I'd like to do some research. Sure, here you go. You know, we have trifolds, marketing pages in color and very professional paper. And the good news is that you all get access to this 100% complimentary. It's free. They ship it to your house for free or your office. You can get a ton of marketing material and give it to your clients at no charge. It's no charge for you to get it. And it just makes you look that much more professional. And you're giving them quality information. So this is something that you can leave with your clients when you explain them about living benefits, so they understand, well, what qualifies a chronic illness living benefit? So a doctor has certified within the past 12 months that you are unable to perform 2 out of the 6 activities of daily living for a period of at least 90 consecutive days without assistance, or that you are cognitively impaired. So things that what a doctor looks at, or the life insurance company qualifies that as activities of daily living that you can't do for 90 days, whether it's bathing yourself, continence, dressing, eating, toileting, transferring, meaning that you can't move from here to there. So when these are things that can kick off the chronic illness rider, that somebody can go and benefit. Now, receiving your benefit, generally the rider needs to be enforced for at least for a period of 2 years. And there's an annual limit on the amount of benefits you can receive. There's also a lifetime limit on the amount of benefits you can receive across all accelerated benefit riders. So that's why the illustrations are huge, which I'll be showing you one here shortly. So note that if you do not have to be in a licensed facility to receive payments, and that you can apply for benefits every 12 months. Benefits can be used for any reason with one state exception, right? So California is not one of those states, so we're good to go. And you do not need to, it does not need to be used for medical expenses. So some policies out there have living benefits, but they're very strict as to what those monies can be used for. So a National Life Group, people can use that money for whatever they want. And I think that's valuable. It's very valuable. So the critical illness or critical injury, so what qualifies? So if someone ever comes down with a critical illness, here are the examples. Lou Gehrig's disease, aortic graft surgery, aplastic anemia, blindness, cancer, cystic fibrosis, end-stage renal failure, heart attack, heart valve replacement, major organ transplants, motor neuron diseases, strokes, sudden cardiac arrest. So if any of your clients ever come down with something like this, you want to make sure that their beneficiaries know to contact you as their agent, because one of the major selling points I got from this last big event, and that I want to apply to my business, is when you do business with a client and they get a policy and they tell you their beneficiaries, oh, it's my son who lives in Chicago. You know, it's important for you as the agent to contact that son and say, hey, you know, hey, Dave, my name is Carlos Salgado. I am your father's agent, and you are his primary beneficiary on his policy. I wanted to make sure that you know my information in the event of an emergency, so that you can, you know, reach out to me if something ever happens to your father, a critical illness or an injury, or he ever comes down with cancer, and he's not in a position, you know, not cognitive enough to know that, to tell you that, hey, I have something, you need to know that you can contact me. And, you know, they're going to appreciate that, you know, and you get the birth dates of your beneficiaries policy, because you have to have their dates of birth. So why not call those beneficiaries on their birthday, just to start building a relationship? And guess what? You know, more often than not, they're probably going to say, you know what, I don't have anything myself, and they may have a family of their own. It's just another way for you to continue to provide value and service and build your business. So it's important that we get in touch with beneficiaries because of all the value that we offer, and inform them that, hey, in the event things should go south, I got your back. Give me a call. I'm here for you. Right? So this is huge. Okay. The cool thing about term insurance now is that we do a lot, but we believe in term insurance with living benefits. So here's an example of a term insurance policy with living benefits. So I pulled this illustration right from the back office of National Life Group. So again, here's the example of a $500 death benefit for a 40-year-old male for $95.92 per month. That's fixed for 20 years. So we also do other companies as well for term insurance. So if somebody just wants, look, I just want plain vanilla term, you can do a much more, even less expensive term policy for 40 years. I just did one for AIG for $500,000 for 30 years for $44 a month, right, for a 36-year-old male. Okay, so they were like, no, I just want the most cheapest insurance you got. You know, I see the living benefits, even though you should have living benefits. But you know, he had all these other plans and Aflac in place, and so give the client what they want. So we do have options. Okay, so when you, in the event that you need another company, we work with many other companies, guys. AIG, North American. Okay, so just get in touch with your office and find out their resource plan, so you can get in touch with the right resources to get different quotes. But more often than not, our go-to 98% of the time is, at this point, is National Life Group because of the living benefits. So being 40 years old for 95 bucks, having $500,000 of death benefit with living benefits, I think is very, very feasible. It's affordable. I mean, 100 bucks, the event of an unexpected death, or if you have a terminal illness. So this is what's in the illustration page. So you see in the picture there, the terminal illness shows that at age 45, if this person were given less than 2 years less to live, 24 months, they can exercise the terminal illness rider and pull out of this $500,000 policy $428,000 to do whatever they want to do with. So a great example, why would somebody do that? Is because what if that person is married and, you know, they're already living on a tight budget and they have less than 2 years left to live? How cool would it be to say, you know what, honey, let me exercise my living benefit. Let's pull out this $428,000. You don't have to work for the next 2 years. We'll still leave money for the, we'll still leave money for the funeral, but I don't want you to, I want to be able to spend these last 2 years with my family. How valuable is that? I mean, think about it. The illness rider, or again, is the, if a person cannot do the 6 aspects of daily living that are provided there, then it would exercise this monthly benefit that would pay out for 50 months. So if you look at age 44, it would pay $32.42, so $3,242 per month for 50 months, 50 months. So that helps out, right? So if someone's going through chemo, radiation, they're in a tough position medically where they're going through a recovery process. Maybe they get disability from work, but how good does it feel to say, you know what, you're going to get $3,200 a month? You think that might cover a mortgage payment? You think that might cover a car payment? You think that might put some food on the fridge, food on the table? I think so. So this is really valuable stuff. Again, the critical illness or critical injury, again, is someone goes through a coma, it's a really terrible car accident where they're kind of incapacitated. You have this heart attack, stroke, is deemed by a doctor. So based on this illustration, for the minor, a minor situation, it's $0, because for this policy, a minor situation wouldn't qualify. But if a doctor said, you know what, this person had a severe heart attack and they're 46 years old, one option we can do is like, look, they can now exercise this rider and pull out $246,000, right? Almost $247,000 tax-free to help offset medical costs, and just be there in any way financially for whatever needs are necessary for that individual or that family. That's huge. Okay, that's huge. So this is the term policy. And again, probably one of the biggest highlights of a term policy, because people love the IUL, it just can be pricey, but it can be converted to a permanent policy, i.e. the IUL within 5 years of issue with no underwriting. So that's awesome. So what that means, if somebody got a term policy like this, so let's say you sold this policy to somebody and they're paying the $95, $92 per month. It's a 40-year-old male. And let's say that they come down with cancer in year 2, but they're not going to use the policy, and they beat that cancer. They can still convert it to a permanent policy with no underwriting because it's within the first 5 years of the policy. I don't know about you, but I think that's awesome. Okay, that's a great benefit, a great option. So I've done a lot of business that way with clients being like, I want the IUL, I just can't afford it. Hey, let's start with the term policy because you need the coverage. Do you think within 5 years you're going to be in a better financial situation? Sure. But their debt and their income and the other aspects of what we do within the 6-step financial plan, there should be no reason why years they're not probably coming back to you to say, okay, let's upgrade it now. And now you have a long-term plan and something more beneficial in a permanent plan. Permanent insurance, this is our flagship. This is our bread and butter, the steak and potatoes of what Difference Financial offers with the Index Universal Life, the IUL. Major benefits right off the bat is lifetime protection. If funded properly, it will never expire. So unlike a term policy that is only going to be around for 5 to 30 years, most people often have a 15 policy. But if you have a permanent plan, even after 20 years, you're still going to have that coverage. You're still going to have that coverage. And it's not something that you have to pay all the way to the day you die. You can pay up until like 65. And because it's compounded with the cash value in there, because inside of an IUL, the index portion, the performance is tied to the S&P 500 index. So it has caps anywhere between 8 and 12.5%. So we do a few IULs. For example, Provider IUL at National Life Group offers 8% or 8.25% cap, right? And Flex Life IUL offers a 12.5% cap annually. So what other product out there, and let's be realistic, think about how we're servicing middle America. People are putting money in banks. How awesome is it that you can now offer a service, a valuable product that can help somebody earn a very attractive interest rate that is just like you would in the market, because there is no bank that's paying 8 to 12.5%. How good would that feel to be able to help somebody do that and then give them a floor, meaning the 0% floor is they will never lose money. So if they had a good year and they earned 12.5% in the Flex Life, they're going to keep that gain, because if the next year the market goes negative, they're going to earn 0%. So they'll never lose any money, and they'll never lose any gains prior to that loss in the market. That's beautiful, right? That's what we love about the IUL. And the cherries on top are you still get the living benefits, the just in case stuff, right, that we've been covering. And probably the biggest reason why we use National Life Group, because they are the only company in North America that offers the LIBOR, which is the Lifetime Income Benefit Rider, which is those monies that if somebody pays this monies up until, say, 65, well, now they're able to get their premiums back in terms of like a pension, like a lifetime income payment that they never outlive. I'm going to show you a pretty profound illustration of that here in a few minutes. So here's something I took right from the illustration. I share this slide with all of my clients when I'm doing IUL, because a picture's worth 1,000 words. So when they, when I explain it to them, it's one thing, sometimes they don't really fully understand the concept. I know, because I'm a very visual learner myself. So sometimes you can tell me something, and from an auditory standpoint, I'm not going to, but when you can show me in a picture, I'm like, oh, okay, that makes sense. So you got to utilize these tools in your illustrations because they're strong selling points. A lot of times people don't understand the 12.5% cap. They're like, that's good, right? That's very good. So this is a great picture. So if you look, it just shows the actual performance of the S&P 500. So let's study right now, first year 1997. That's where we're going back to. The S&P 31%. That's awesome. That's a good year. Anybody would love to earn 31%. But we're capped at 12.5%. So our clients are not going to get the 31%. And I explained that to them. I said, you're not going to get 31%, but you will get 12.5, and 12.5 is. However, let's look at into 2002. You see the negative years, negative 10%, negative 13, negative 23. So now it offsets that 31% and 26% and 19% gain. Those are no longer 31%, 26%, 19% years, because we now have to compensate for the negative years. So the good news in us is we still keep the 12.5% gains the year before, because we never lose any principal, and the floor kicks in. So on the negative years, all our clients earn is a 0%. Ever lose a single dime. This is exactly what I tell our clients. I say, you know what, Bob and Mary, you'll never, one thing we're proud to say is that we've never had a negative year. You will never lose money. You can only earn money with us. Yes, you're capped at 12. That can be seen as a con. How you will never have a negative year. So really value that once they truly understand it. It's your job to ensure they understand it, not just consider the worst market crash since the Great Depression. 38.49% loss in the S&P 500. So if somebody had, they almost lost 400 grand, just like that. So we can show them and say, look, if their money had been with us, they're just going to earn 0%. Do you see the value in that? I say, yeah, wow, that's good. Right? So it shows the average, it shows the performance. Over the last 20 years, even with all the markets at what this IUL performance has averaged is about 7.3%. Now, that's a pretty darn good interest rate. You're not going to, you can earn more in the stock market, but again, certainty, there's risk involved. So for most middle class averse, so if you can show them the way to be risk averse, not lose any of their money on their money, that's pretty darn good. Here's an example of the lifetime income benefit rider. So pay attention. I highlighted certain aspects of it. So I show this in illustrations to really highlight something really, really important. So I highlight, you see policy year 31. What that means is that this client has funded this policy for 31 years up until age 65. And if you see on the bottom there, it shows $186,000. So what that means is that for the last 31 years, this client has put out of their own money $186,000 into this IUL plan. Now, what does that mean? So what that means now is, and I didn't highlight it, if you look at accumulated value under the 31st year, it shows $463,000, almost $464,000 of cash value. So what that means to this client now is, hey, I put in $186,000. I've had some growth. I now have almost $500,000. So I'm going to be able to turn on lifetime income. And starting at age 66, this policy is going to pay me $32,476 per year, 100% tax-free for the rest of my life. So I've had people tell me like, well, $32,000 is not that much money. I get it. But everything is proportionate to the contribution. So if somebody put $186,000 of their own money over 31 years, the reason I highlighted those first 9 years is because look how much money this person has pulled out in their first 9 years of retirement. They pulled out $292,000, 100% tax-free after 9 years of retirement. Meanwhile, they put $186,000 over 31 years. And again, we ran this we ran this illustration at a modest interest rate of 7% based on what it's done over the last 20 years. Could it do better? Yeah, because it has a cap of 12.5. But 7% is still good. And I don't know about you guys, right? If I paid $186,000 over 31 years, and I not only did I get my contributions back, but now I'm getting excess tax-free, and it's guaranteed for life, that's pretty flipping valuable, right? Look at age 84 now, because now this person, they stopped putting premium payments at 65. They're now just receiving cash, because even in retirement years, this policy is still tied to the S&P 500 index. So the cash value that's remaining, that's not being used, still participates in the growth of the market up to 12.5%. Okay, so you see at age 84, this person has now pulled out $617,000 up to this point since retirement, tax-free. And if they died at age 84, look to the very right, the death benefit that's still passed on. They still pass off $243,000 of 100% tax-free to a beneficiary or beneficiaries. Pretty cool, right? Do you feel that this person maximizes policy by saying, listen, you put $186,000 in, at 84, you've already taken out $617,000, 100% tax-free. And in the event of a death, you still get to pass on $243,000 to a beneficiary. That's pretty awesome. So it's valuable, guys. This is value that we offer. You have to know this and be able to explain this. And if you can explain it just as I showed you, because you all have access to the illustration software, you're going to do a lot more business, because people are going to really recognize this value, and they're going to say, wow, my policy that I have now doesn't do that. It doesn't have a guaranteed lifetime income payment. You know, this ain't your grandpa's life insurance policy. I mean, this is state of the art. This is as modern and contemporary as the game gets. This is why it's such an exciting time to be part of our industry, because of all these new tools and resources and benefits that now policies can offer that they'd never offered before. It's huge. So we also have final expense insurance. Close to our last slide here. So final expense insurance is going to be for your clients that are, it's best suited for seniors probably over age 65. Because if you have a senior citizen that says, well, I'm 65 or 70, 75, one of our teammates, Isaac Sacila, he did a final expense policy for a 76-year-old woman a couple months back with Transamerica. And she was paying a couple $100 a month, right, for I believe $25,000, $26,000 around there. So again, that's not a lot of money, but it's much more affordable to a senior than getting a traditional life insurance policy that they can't afford. So something is better than nothing. And in the event of a death, they at least have something. There's no medical required. Typically, again, the face values from a final expense policy are going to be from $10,000 to $30,000, right? So somebody for, say, $50 can get a $10,000 burial policy, right, in the event of death. That's much more affordable than even term or especially permanent insurance. Or they can range up to maybe $30,000. That client's going to pay a little bit more, like $250. But there's so many baby boomers right now who never got covered and are now really realizing, like, I just can't afford it. Well, have you heard of final expense insurance? Perhaps. What can you afford? I mean, right now I'm 70. I can probably afford $100 a month, but what's that going to get me? Hey, it can get you a whole lot, because it's a lot better than you have now. Let's talk about that. We can cover funeral costs or cemetery costs, other types of burial expenses such as hospital, medical bills, attorney fees, court costs, taxes. Those things all come into play at death. So why not have your client be protected so that, hey, he or she didn't leave behind a $500,000 policy, but man, at least they didn't cause a burden to their children to have to pay these expenses that have to be paid for. So we offer that, guys, right? So now you see we offer term insurance. We offer term insurance, permanent insurance, and final expense. Let me get on here. There we go. I'm back. So that in a nutshell is why life insurance. We covered that with less than an hour. I hope you guys got value from that. This is a great video to really share with new associates who are new into the industry, don't really know a lot about what it is that we offer specifically. So you can refer them to this webinar as a great aid to educate your associates on the power of what they're going to be able to do once they get a life license. And let's go out there and help a lot of families. So with that being said, I hope you guys got a ton from this. Thank you for tuning in. I see we got a good amount of people that tuned into the webinar today. This is going to go into our back office for further training. We'll see you guys next week on the next webinar. Have a good day.